The U.S. economy faces rising oil prices, trade tensions, and slowing migration, all threats that could tip growth into recession. What should you expect in early 2026? The U.S. economy in early 2026 is navigating significant headwinds. Rising oil prices combined with ongoing global tensions are increasing pressure on economic growth. Analysts estimate the probability of a recession is between 30% and 40%. Despite these risks, the International Monetary Fund highlights the global economy's notable resilience, especially due to strong investment in information technology sectors. This means growth could slow but not necessarily collapse, creating a fragile environment for businesses and consumers alike. US Census Bureau projections show that net migration for 2026 will be significantly lower than the 2.4 million recorded in 2024, dropping closer to 1 million. This decline means fewer new workers entering the labor force, which could tighten labor markets and constrain economic growth. The lower migration figures add another layer of complexity to the economic forecast, especially for industries reliant on steady workforce growth. In the second half of 2025, the Federal Reserve delivered 3/4-point interest rate cuts to stimulate the economy. However, with inflation climbing through the first half of 2026, the Fed is expected to hold rates steady until at least December. This steady approach signals caution as the central bank balances supporting growth with preventing runaway inflation. For consumers and borrowers, this means interest rates remain relatively high for now, affecting loans and mortgages. The United States faces a widening federal budget deficit relative to GDP, with no major debt reduction in sight elsewhere in the economy. This means the country continues to consume more than it produces, pushing the trade deficit higher. Such imbalances can weaken the dollar and add pressure on the economy over time. Policymakers will need to address these fiscal challenges to sustain long-term growth and financial stability. Starting July 2026, new federal programs are expected to increase interest in non-degree credentials, a key shift in workforce development. While details are still being finalized, these programs aim to help workers gain relevant skills quickly without traditional college degrees. This reflects a broader trend responding to labor market demands and could offer new opportunities for career advancement in a changing economy. For you, this means a cautious economic environment in early 2026. Rising costs and slower growth could impact jobs, borrowing, and prices, but opportunities exist in tech investment and new education paths. Stay informed and prepared. Subscribe for daily updates on what's next.